The city's financial heart beats with a nervous energy, its glass and steel towers reflecting a sky heavy with uncertainty. On the trading floors and in home offices around the world, all eyes are locked on screens flashing an ominous rhythm of green and red. The familiar morning hum has been replaced by a tense silence, broken only by the frantic clicking of keys and the sharp intake of breath. This isn't just another day on the market, it's a moment of reckoning. Breaking news alerts flash across every feed. The market is on edge, teetering on a knife's blade as the opening bell's echo fades into a sea of volatility. The digital tickers, once a symbol of growth and prosperity, now narrate a story of rapid descent, their numbers flickering like a dying flame in a gathering storm. The first domino falls and then another. A cascade of selling pressure grips the market, pulling the giants down with it. The Nasdaq, a beacon of technological innovation and growth, suddenly stumbles, its index plunging into a deep crimson trough. Animated charts on screen paint a brutal picture, a steep cliff where a gentle slope once stood. The S&P 500, the broad-shouldered benchmark of American corporate health, follows in lockstep, shedding points at an alarming rate. The digital town square of financial Twitter erupts in a frenzy. Simulated feeds pop up, showing a deluge of reactions. Established analysts tweet about broken support levels. Retail traders post memes of crashing roller coasters, and seasoned investors issue stark warnings about the velocity of the drop. The ticker tape, once a symbol of opportunity, now streams a relentless river of red. Each downward tick a fresh wave of panic washing over the global financial system. The numbers don't just fall, they plummet, accelerating into a free fall that seems to have no bottom. As the dust begins to settle, the scale of the damage comes into focus. Clean modern typography overlays the chaotic visuals, presenting the stark numbers in unsparing clarity. Percentage drops that would have been unthinkable just hours before are now a harsh reality. We see key statistics highlighting the trillions in value erased from global balance sheets. Slow-motion footage captures the human toll of the digital carnage. A trader with his head in his hands, an empty Wall Street floor that feels more like a tomb than a temple of commerce. Sophisticated graphics dissect the downturn, visualizing the carnage sector by sector. Technology stocks, once the market's darlings, are shown bleeding the most value, followed closely by consumer discretionary and industrial sectors. The visualization reveals a systemic weakness, a contagion spreading from one corner of the economy to the next, leaving no industry untouched by the pervasive sense of dread and financial loss. As dusk descends, casting long shadows over the city skyline, an uneasy quiet settles over the markets. The closing bell has rung, but the day's turmoil leaves an indelible mark. A final graph materializes on screen, charting the day's brutal journey and showing the market's closing position, a low point that offers little comfort or sign of a quick recovery. The line hangs suspended, a question mark posed against the future. The screen fades to black, leaving behind a single sobering statistic: the largest single-day point drop in over a year. It lingers in the darkness, a stark reminder of the market's fragility and the uncertain dawn that awaits.